For decades, China experienced an economic boom. Millions were lifted out of poverty. The country became a global powerhouse. This success was built on openness to foreign investment and a rapidly growing private sector. China embraced global trade and joined the World Trade Organization. These policies ushered in an era of unprecedented growth. China's rise was remarkable. It became the world's second-largest economy. It was on track to potentially surpass the United States. This success story captivated the world. Many saw it as a testament to China's model of development. However, the landscape began to shift. Xi Jinping assumed power in 2012. With him came a new set of priorities. The emphasis shifted towards national security and state control. This change in direction has had profound implications. It raises questions about China's economic future. It also offers important lessons for the rest of the world. Section 2. The rise of Xi Jinping, a new era. Xi Jinping consolidated his power quickly. He embarked on an ambitious anti-corruption campaign. He also strengthened the role of the Communist Party in all aspects of Chinese society. This included a greater emphasis on ideological purity. Under Xi, the government took a more active role in the economy. State-owned enterprises gained prominence. Private businesses faced increased scrutiny and regulation. Xi's vision for China is clear: a strong, centralized nation with the Communist Party at its helm. This vision has led to greater state control over the economy. The government has cracked down on private companies, particularly in the tech sector. These actions have sent shockwaves through the business community, both in China and internationally. The message is clear: the days of unfettered growth for private businesses are over. Xi's focus on national security and state control has created a new economic reality in China. National security has become a paramount concern for China. The government argues that economic strength is essential for national security. This has led to policies aimed at reducing dependence on foreign technology and investment. China is investing heavily in strategic industries. This includes artificial intelligence, semiconductors, and renewable energy. The goal is to achieve self-sufficiency in critical sectors. China wants to be less vulnerable to external pressure. However, this emphasis on national security comes at a cost. The crackdown on private businesses, often in the name of national security, is creating uncertainty. Foreign investors are wary. The free flow of information and capital is being restricted. While national security is undeniably important, the methods China is employing raise concerns. The tight grip on the economy could stifle innovation and long-term growth. This approach risks isolating China from the global economy. The shift in China's economic policy has had a chilling effect on businesses. Domestic entrepreneurs are facing increased scrutiny and regulation. Foreign companies are rethinking their investments. The rules of the game are changing, and not everyone is comfortable with the new reality. For foreign companies, the risks of operating in China have increased significantly. Intellectual property theft remains a major concern. Forced technology transfer is another worry. The arbitrary enforcement of regulations adds to the uncertainty. As a result, foreign direct investment in China has plummeted. Companies are looking for alternative destinations for their investments. This exodus of capital could have significant consequences for China's economic growth. The message to the business community is clear: China is no longer the sure bet it once was. The risks are rising, and the rewards are diminishing. Section 5. Foreign investment dries up, a warning sign. Foreign investment has long been a key driver of China's economic growth. Companies from around the world flock to China to take advantage of its vast market and low-cost labor. This influx of capital fueled China's economic miracle. However, the flow of foreign investment into China has slowed to a trickle. Companies are hesitant to invest in an environment of increasing uncertainty and risk. The crackdown on private businesses, particularly in the tech sector, has spooked investors. This decline in foreign investment is a worrying sign for China's economic future. Foreign investment brings not only capital, but also technology, expertise, and jobs. Without it, China's economy could struggle to maintain its growth trajectory. The Chinese government is aware of the problem. It has taken some steps to try to lure back foreign investors. However, it remains to be seen whether these efforts will be enough to restore confidence in China's economy. Section 6. Innovation stifled the price of control. Innovation has been another key driver of China's economic success. The country has become a global leader in areas such as artificial intelligence, renewable energy, and biotechnology. This innovation has been fueled by a vibrant private sector and a spirit of entrepreneurship. However, the government's tightening grip on the economy is stifling innovation. The crackdown on private businesses, particularly in the tech sector, is creating a climate of fear and uncertainty. Entrepreneurs are reluctant to take risks. New ideas are being stifled. This is a worrying trend for China's long-term economic prospects. Innovation is essential for economic growth and competitiveness. Without it, China risks falling behind in the global race for technological supremacy. The Chinese government is aware of the problem. It has launched initiatives to promote innovation and entrepreneurship. However, these efforts are likely to be ineffective unless the government loosens its grip on the economy and allows the private sector to flourish. Section 7. Lessons for the West. The value of openness. China's economic situation offers valuable lessons for Western countries. The Chinese experience demonstrates the importance of a free and open economy for fostering innovation and growth. Excessive state control, protectionist policies, and restrictions on foreign investment can have detrimental effects on economic progress. They can stifle innovation, discourage investment, and lead to economic stagnation. Western countries should view China's current economic challenges as a cautionary tale. They should reaffirm their commitment to open markets, free trade, and the rule of law. These principles have been the foundation of Western economic success. By staying true to these principles, Western countries can ensure their continued economic prosperity and maintain their competitive edge in the global economy. Section 8. China's economic future uncertainty looms. China's economy is at a crossroads. The era of rapid growth fueled by foreign investment and economic liberalization appears to be over. The country's future economic trajectory will depend on the choices made by its leaders. A continued focus on state control and national security over market-oriented reforms could lead to further economic stagnation. It could also lead to greater isolation from the global economy. Conversely, a return to policies that encourage private enterprise and foreign investment could reignite growth. It would also help to restore confidence in China's economy. The world is watching closely to see which path China will choose. The stakes are high, not just for China, but for the global economy as a whole.